Some key things to know about weekly options trading. Weekly options trade Monday through Friday each week and expire the following Friday or Saturday at market close. This accelerates the trading time frame. They allow traders to capitalize on emerging price trends over periods of just a few days rather than weeks or months. This makes them well suited for volatile stocks. Short expirations mean theta decay really ramps up the closer the option gets to expiration each week. This favors sellers of premium over buyers in many cases. With multiple weekly expirations available at a time, traders have more opportunities each month to trade reactions to news/earnings compared to just one monthly expiration date. However, the fast timeline also means less time for price targets to be reached, increasing risk. Position sizing is important for weekly trading. Popular strategies include weekly credit spreads, iron condors, or strangles to benefit from accelerated theta decay in sideways markets. So in summary, weekly options cater to very short-term oriented traders seeking faster alpha over periods of just a few days at a time. Their high risk is offset by numerous trade opportunities each month. Get more info from the link below.